So, guys, when you're trading news events like this, and it's NFP weekends or weekdays on a Friday, usually the last Friday of the month or the first Friday of the new month, depending on how we fall. My advice in general is, when you do get to the professional stage of consistent trading, you are typically just using this as a day off. This is your day off to reflect, learn, spend time with family, spend time with loved ones, whatever you want. Think of this as almost like your 3-day weekend. You get it once a month. That's one of the perks of being a successful forex trader. But so usually we go over mindset and things like that on a Friday. And whilst we are going to cover, aspects of mindset and things like that, I did want to take this opportunity because it's an FP Friday and things like that. I did want to take this opportunity just to kind of go over a few things again to kind of explain why some of you may have been getting stopped out unnecessarily and things like that this week, because typically high impact news weeks, this is a very, very strange week for trading anyway. And I know some of you were kind of looking at Euro USD and you got in on the 1 minute accumulation and then you got taken, or then you missed the entry, and then things like that obviously start to happen, and it plays with your emotions. And guys, I completely get it. I completely understand the emotion behind it is very, very real, and it's very, very much there. But just a couple of housekeeping rules with regards to the accumulation phase. So essentially, we went over this on, was it Wednesday? The Wednesday just gone, where typically what I'm looking for you to try and do within this is identify this pattern. So the first thing you want to identify is that you've got this down candle here. Now this can be one candle, you could have two candles. Don't need that one there. Get rid of that. So you've got one candle, you've got two candles, whatever it is you need, you've got your order block. It's the entire push down. Don't worry about calling it anything other than the push down for now. You want to obviously make sure you've swept liquidity. Now, one thing that is extremely vital is that there is imbalance within the entry. But on this Euro trade that was actually taken yesterday, we had a couple of people miss the opportunity because price, it looked a little bit like this, if I'm mistaken. Essentially, we had two areas of imbalance, and I think price was maybe a little bit higher. And then what essentially happened was price came to that imbalance and then went higher. Is that what a lot of you saw on Euro? So if you see something like that, if you see two areas of imbalance, there's two things you can do. One, take the first area of imbalance rather than the second, because chances are it's going. So what, there's a few situations that could obviously happen. It could literally come straight down. In theory, it should respect this first area of imbalance, because price isn't necessarily always interested in coming straight down, which is why we miss a lot of these institutional candle entries. When I was trading about a year ago, when I was getting to the point where I was consistent, but I wasn't as consistent as I am now, I was really focused on only taking FU candle open trades. So, I'd have my stop loss really, really tight at the bottom, and it would always miss me. It wouldn't get me into a trade. So what I actually do now is I end up taking the imbalance and I actually put my stop loss, and I'm aggressive with this and it does stop me out. But essentially I generally put my stop loss below the candle's low. And I'll show you examples of this essentially. And I do that being very aware that this imbalance is here. But at the same time, this should, in theory, going by structure, respect it. Now, imagine this here is your 1 minute. And this is where I think, some of us got maybe a little bit confused, because a lot of you seem to be kind of focusing on the 1 minute chart at the moment. Now, whilst that's okay, essentially what another chart would have looked like, and this is what happened on Euro yesterday, is price came in to this imbalance, which was sitting here, and this was your down move, just like that, your liquidity grab right there. Now, this was actually what it looked like on a 2-minute chart. So what you need to get into the habit of doing is having a look at other timeframes. Now, price is going to expand high here, but on a 2-minute chart, you can only see one area of imbalance. And actually, the chart and the entry is extremely clean on the 2-minute chart. The 1-minute doesn't look as clean because there's 2 areas of imbalance, but it's only showing one area on the 2-minute chart. Now, the 2-minute chart paints a better picture than the 1-minute chart because the 2-minute chart is a higher time frame, albeit there's a minute in it. But essentially, when you're trading on a 2-minute chart, you've got more of a chance of getting your trade, and you've got more of a chance of getting a tighter stop and things like that. But the 1-minute chart can sometimes miss when you've got areas like this. But long story short, the first imbalance is going to be your first area that you're going to want to take. Okay, now I would advise you go super conservative to start with and have your stop loss all the way down here. And when you get, really good at this strategy and you get to the point where you're confident and you just know by the patterns it typically tends to make, you'll start bringing your stop up for higher risk reward ratios. But just for now, experiment with it. If you see a situation where we have got 2 areas of imbalance, then take the first one. Ideally, you want only one anyway, because then it eliminates the risk factor, because down here there is imbalance and price could sweep below. But that's why I'm saying, enter on the first, but bring your stop below this one here, just to be conservative, just to give price a little bit of room. Because typically what will happen with me, I'll set my entry here, and if I've got a two trade, 2 stop loss rule. So if I know I'm trusting my analysis and things like that, and I'm taking maybe this trade here, if I get stopped out and it comes into this imbalance, I'm looking for this again on a 15-second chart inside this imbalance. And if it happens there, I go in for another entry there. And if I get stopped out again, so if that happens, I actually get taken out of my trade again for a second time, the rules are extremely simple. I'm done for the day. There's no more trading after 2 losses in a row. Whether you risk 0.5% on both trades, whether you risk 1% on both trades, you are done for the day. And you just have to accept it. Yesterday I took 1 win. It was like a 1-3, 1-4 or something like that. And I had a break even and I had 2 losses in a row. And I stopped for the day. And then I was watching the charts and I was on Euro and I saw the most perfect accumulation play, looked exactly like this one here, and I didn't take it, but maybe a year ago I would have, and all right, I would have maybe been into this trade and got into profit, and it would have got me out of the 2 losses that I had. However, imagine the scenes if I'd have got stopped out again for a 3rd time in a row. Now you're talking from 2% loss for a day to 3% loss, and that is the beginning of the end for your account, because you get into a negative habit. If you're risking 2% on a single trade, you have to really go on a basis that if you lose 1 trade, you're done for the day, or you're only going to risk 2.5% in a single day. So if you risk 2% on 1 trade and you lose that 2% straight away, your next trade, your next opportunity is a 0.5% risk trade day. For me personally, I risk 1% on everything, whether it's really, really tight, whether I'm leaving a little bit of room, 1%, because that then gives me 2 trades and I know I'm not going to lose 2% for the day. 2% of your account is minuscule, guys. But if you start getting into a habit of losing 2, 3, 4 days in a row, obviously that 2% turns into 8%. And then suddenly you're a bit panicky, but you have to realize that you're 1 trade away from going back to break even. So it's just about trusting the process. I've lost so many trades that I now don't care, and I completely trust the process because I know I'm going to win trades and I trust my analysis. But, don't be afraid to go from taking it at the first imbalance, but actually having a look around, scale between the 1-minute charts, the 2-minute charts, the 3-minute charts, because what you'll find is different things, different patterns formulating, and it will start to make a lot of sense. Now, the other thing I think you all need to get into the habit of doing is making sure that when you are trading, you are doing it within a 1-hour area. So for example, if you are, this here is a point of interest, that there can be, a 1-minute, a 1-hour candle. You're only looking for the distribution phase to happen when it happens inside your candle. If price starts doing it here, and you're in the 50% area, for example, let me just make that a little bit cleaner. So if price starts happening here, you have to accept the fact that where you are on your trading range, you could get stopped out, because price can travel all the way up to here. And in fact, if you get the updated fibs out, if you've watched that on module 3, the kill zone, we want price to come into our kill zones. We don't want price just to react at 50%. But the issue is, a lot of people, and I'm included in this, I take a lot of trades in these areas. When price doesn't go to my kill zone but comes to my 50% area, and I start on a smaller time frame seeing these sorts of patterns happen, and I see the distribution, it makes me think, oh, I could get in here, but then I get really frustrated with myself when I've been taken out again. So you've got to really think of it in one or two ways. You can think to yourself, right, this is my first trade chance here. My second one is, if I get stopped out here, I'm going to wait for price to come into here. And if I lose both of them by price being manipulative on a high impact news day, I'm out of the day. If I win here, because what another thing that tends to happen a lot is, maybe in London session, so let's just say, for example, you're playing at the 50% level and price, is pushing up and then does distribute, you get into a trade and you get to maybe a 1 to 3, and pop yourself in the comments if this is you, and then price suddenly goes back again and you get taken out, or you go to break even and you think, well, that wasn't really worth it, whatever. And the reason is because price is moving higher. Price is coming to your area where it really wants to move from. So you have to be aware of where you are on the higher timeframes at all times, and it's really about just making sure you're really assertive and alertive to that. When you're trading on a daily time frame, for example, if price is bullish, moving higher, and you can see the clear expansion to the upside, you're going to identify these areas here. You're going to look for where your discount area is, which is right here, 50%. Okay, 50% is your discount area. Now, within that discount area, you're looking for FU candles, IC candles, imbalances. Now, if you find an area of imbalance inside here, you have to be looking at what the smaller time frame is also doing. If price is doing this, for example, and now let's just say price has hit this area of imbalance. Okay, let me just change the color of this. And let's just say we've hit this imbalance here, and I'm playing around with this sort of stuff here, so I don't, if I'm wrong. Right, so let's kind of draw a microscopic thing of in here now. If price is in this area here, gives you that accumulation. So, on a smaller time frame, price starts doing that, and it gives you the perfect 1 minute, 2 minute, 3 minute entry, whatever. You can take the trade in there. That's absolutely fine. Okay, but this is where you have to consider your targets, because let's say, for example, this here is your daily. Okay, now this red line here indicates your 1 hour. Now, when you take the trade, if you take this on a 1 minute area, it's inside your daily imbalance. Your target has to be, so let's say you've taken it, it has to be at the order block of the 1 hour candle, or at the institutional candle of the 1 hour candle, because on the smaller time frame, the 1 hour time frame, you are still bearish. You are moving lower. So you have to be prepared for price to do that again. So this is where we talk about market structure. And when I go over things about market structure, this is what I'm saying about your targets and things like that. You use the daily as kind of like your foundational area where you want to see something happen with price. You want to see, the accumulation phase inside your imbalance. That's a perfectly good area. Now, when price does that, it's going to give you a reaction, because price naturally has to retrace back into the 1 hour area. to then take it lower. So when you do this, and you can then maybe go on to an even smaller time frame. So when price comes into this 1 hour area here, and you start seeing something like, you know, this happen, that's a sign for you to potentially think about coming out of your trade, because you can see the distribution happening. Okay, and this could, you know, if you're on this could be a 15-minute time frame, a 5-minute time frame. If the market structure is bearish, even though you're in line with the daily area, because you've reacted in this imbalance, you've seen a good opportunity. But you have to be very aware of where we are inside these areas as well. So if there's an institutional candle here and you want price to come even lower, which is actually your kill zone, you know, you're waiting for this here to happen again. So if that there opportunity actually stops you out, or you go in for maybe a 1 to 2, 1 to 3, price hits your 1 hour area here and then comes even lower, you understand why, because you know where you are within the daily range. You're looking overall at the higher time frame structure. You know, that is essentially what the key is. You know, even if the 1 hour from this accumulation here, let's say you get in on accumulation and the 1 hour actually breaks structure, well, you're still only going to be targeting the 1 hour high, because if you get into really good profits up here on the 1 hour and you've targeted some imbalance, you could still see a rejection here, because what we're now going to see is price come back into an area on the 1 hour chart. So this 1 hour area now has the discount area, the imbalance, the candles, and it can look exactly like this daily area here. It can be at the 50% level. And then your targets are only in within 5-minute structure, within 15-minute structure, and it really gets a lot smaller. Am I making some kind of sense, guys? I'm going to show you loads of examples and things like that, just to kind of go over structure and all that. But I'm hoping this has kind of opened up a few more light bulbs in terms of, you know, just really getting to the bottom of where we are with structure. It's all about knowing where we are on the time frames. You know, the daily time frame is really the king in terms of direction. You are looking for buys, but, you know, there's really 1 or 2 things you can do. You can ignore these setups when they happen here and accept the fact that price might expand to the upside from that area here, or you can wait for price to, you know, you can ignore them and wait for price to come down to your kill zone and then get the accumulation and, you know, risk very, very rarely getting stopped out, or essentially just be a little bit more risky with it. Because like I say, if you lose 2 trades, you're done for the day. It's quite simple. You're just not going to trade again for the day. You know, that is as simple as it is. But yeah, you know, essentially we just need to be mindful of these areas here. Take the first area of imbalance. On the 2-minute chart, it might look a little bit cleaner. This is the perfect scenario for a buy and a sell, obviously imagining it in the opposite direction. You know, imbalance within the candle, liquidity grab, break of structure, obvious break of structure as well to the upside. This here happening inside, you know, a 1 hour area, an area of imbalance, is you just got to take them. You know, you've just got to be, you know, not afraid to lose. You know, like I say, I lost 2 trades yesterday and I couldn't give a crap, because I know that I trust my analysis. I know that I'm going to make that money back, and I know that the way the process of the markets works and things like that. And, you know, listen, I understand the frustration, I understand the panic, I understand the anxiousness behind it all. And I know some of you are doing funded account challenges and things like that. But listen, guys, these opportunities happen every single day. And once you get really, really good at these, it's going to take you to all sorts of levels you really didn't even realize were there. You know, so when we, you know, look at the area here, we can see where we are on the daily. You can actually identify, you know, this whole entire push up. Now, you know, if you have a look here, this is your kill zone for your daily, which we're currently actually in right now. And guys, if you've got any questions, sorry, Tom, I need to run get the kids. I'll catch up on me. Yes, okay, Rachel, have a good one. This will be, I'll upload this one. The other mentorship was recorded on the iPad. That's just taken a little bit longer to get out. But yeah, this one should be up straight after. So yeah, look, guys, you know, you can see what price is doing here now. So 4 hour, and you know, yesterday we were looking at this candle, weren't we? Now, when we came in, you know, we got reactions, but can we see what happened? And I think there were a couple of you looking at EU yesterday as well. You know, we were looking at price, we were looking at selling price into these areas here. Price obviously gave us, you know, really, really nice reactions. We actually got price closing below this low here, and it didn't actually respect the level, but at the same time we closed below. Now I believe some of you were looking inside here as soon as this liquidity was taken. Now obviously when that liquidity is taken, what can you identify? I'm going to do a little replay mode so that we don't have to scroll. So this is exactly the exactly what we're looking at. And if I get rid of all that crap for now, what can we see? I think a lot of you were looking, here, and I think some of you were waiting down here. Am I correct in thinking that, guys? So you were kind of looking at this imbalance, which was a little bit deeper, and this is the imbalance it played in. Now, price was dropping down. So on the 4 hour, we know where we are. We've got the 1 hour candle, which is right here. We would like to see price respect this level. Now, the 1 hour candle closed below this level right here, meaning that structure is still bearish. However, we're still looking for buys. Now, price actually closed below these lows, and that is really, really incredible price action because price accumulated under the lows. Now, you can see the accumulation phase has actually happened by closing literally above this high here. And it's a bit minuscule, and I understand that. We did get a liquidity grab, but essentially, there is this imbalance here, which I believe some of you were looking at. And then there was this imbalance here. Now, what can you see? You can see that we reacted at the first imbalance. So, couple of entry ideas. You could either straight on the candle and you bring your stop loss at the close of the candle that created the imbalance. Even to the point where it went, that's a 1 to 8. Targeting this imbalance here, 1 to 8. Targeting the bottom of the imbalance, 1 to 7. If you had that at the bottom and you were conservative, that's a 1 to 2. It's not a problem because you're still in profit. You're 2% up on the day where you were zero up. So there's nothing wrong with that trade there. But if you actually shop around and you see what's kind of happening, if we really do bring it right up to here, because this was the live view. Okay, this was kind of the live view. Now, this is the point. You've got a couple of minutes here to kind of analyze and see what things are looking like. And what you can actually see is that if you get rid of that and bring that down, how much cleaner does the 2-minute chart look now? You've got 1, 2 candles. That's your order block. Price is closed above. There's your liquidity grab. It's happened below the lows. We've actually closed above this high here on the 2-minute. Does everyone see that? It's so much cleaner. And it's just, all I've done is I've just gone up to another. This is exactly what I did. I was just on a 2-minute time frame. Don't be so worried about looking for price to react on a 1-minute time frame. It has to be, what makes sense to you. Yeah, it's just about what makes sense to you. And, in terms of actual the entry line, it's the open of the first area that is in line. So we've got the order block, this candle and this candle, 2 candles, the open of that within here. So literally there, stop loss can be below that low there, or it can be below here. Now, when you're thinking of targets, your first area as well, I want to go to this imbalance. There's my 1 to 3. But this is where we have to be looking at what the actual structure is doing. What can I see here? 5-minute time frame. Well, we need to actually make sure we break structure on the 5-minute. We might be targeting this area here on the 5-minute, for example. But when I look at the 15-minute, I can see that we've actually got 15-minute structure is bearish. So if you're targeting, this liquidity up here, with respect, that's not the right thing to do, because price might not do that. I can't get in the 2-minute time frame of trading view as I don't have premium channel. Okay, so if you don't have the premium, that's fine. All I would suggest is on the 1-minute, like we just saw, just take if you see 2 areas of imbalance, just take the top one. Okay, just take the top one. And then when you're in a position to obviously get the premium channel, I would obviously recommend it. But yeah, perfect. Yeah, you're smashing it, to be fair, by the way. I've seen some of your stuff. You know, I'm really, really proud of how you're getting on. So keep doing what you're doing. But yeah, so guys, you know, in terms of targets are literally the most important thing. This here, this area of imbalance will get you your 1 to 3. Don't be worried when price only gets you a 1 to 3, because if you're risking a percentage or whatever on it, you know, you'll understand and you'll start seeing that price works in very mysterious ways. So you can see there, price is obviously taking you for your 1 to 3. Now, you can then start seeing prices dropping, it's coming lower. You know, there's a reason this is happening. It's because the 15-minute structure is still bearish. You know, as much as we have accumulated below these lows, this is the nature of the beast in terms of what we're looking to do with our trading now. You know, we are in 15-minute bearish structure. So don't expect this 1 minute, 2 minute area to actually be respected, because the 15-minute will trump these timeframes all day long. You know, so you can expect price. And I don't know how many of you got out, how many of you held it, how many of you went to break even. But, you know, coming out of 3% there in this situation is generally really, really good. You know, and then we can start to look at, okay, now we can see prices actually breaking lower. Well, let's now go up a time frame. Let's go to the 1 hour and see what's happening. Well, you know, it doesn't really look like we're doing much, or I can't really see why we're going lower, because we have got this liquidity here. There's no imbalance, there's no real areas. But when I actually go on to the 4 hour and the daily, you know, you can identify your kill zones and things like that. You can see here, price has not managed to come down to the kill zone yet. Okay, now we can see what's happened, and this is where we are right now. Price is doing this for a reason. Price gave you a short-term entry in there. It was clean. Price reacted inside this area here to come lower. So these are the areas you look for. And, you know, we can now be kind of, you know, seeing what the smaller timeframes are doing. Now, this was the big push down for news. So, you know, looking at sensible options, I'd be looking for potentially some accumulation. We've got our accumulation phase happening here. It's really only happening on the 3 minutes. So we've got the 3 minute closing above here. This is the high, this is the low. Price is now closing above. If we get another little play inside here to go higher, I'd be just targeting this imbalance. Why am I targeting this imbalance? Because there's no reason to say that price isn't just going to pop up in here and then carry on moving even lower. And in fact, this 4 hour area might not be safe anymore. We might be coming for this liquidity, which sits right there, which is why one of the first things I always ask myself every single chart, and this has to be from now on, guys, the very first question you ask yourself on every single time frame, on every single pair, even if you have to write it down, okay, even if you have to write it down and print it off, it is always, where is the money? Okay, where is the money? Print it there, leave it there forever. Because you have to understand the market is after one thing and one thing only, and that is liquidity, money. This is the reason we're all here in front of each other today. We're here to make money. We're here to give our families and our friends and our loved ones the lives we want. We're here to free our children and give them all the opportunities they could ever dream of. We're here to retire our parents. We're here to live the life we want, buy your best car, buy your future house. Whatever it is, you've all got your reasons, and we're doing it because we want to make money. So if we have our edge in this area, in these markets, we understand the way these markets move. And this is the beautiful thing. Why we are all so blessed is because we understand now what's happening. I can see here, this makes perfect sense. For price to disrespect this area here, come to this low here. That there makes as much sense as you could ever need it to make. And you have to actually get into the phase of thinking to yourself now, guys, if I was a bank or an institution, what would I do? Because I know now I would personally be attacking these lows. So imagine here, there are 5 million buy sell contracts in here. 5 million that is there, sitting there to be taken. Compared to in this imbalance, or in this imbalance here, which hasn't been filled, or at this high, there's only 1 million. So what are you going to go for? You're going to go for 1 million. Are you going to follow structure and take this high here and go for 1 million? Or are you going to go to these equal lows where you can visibly see more wicks, more candles, more opinions?